introduce our guests. For those who have joined us, if you have any comments, everyone's joined in on listen only mode. So if you have any comments to share, you can put them in the chat, or if you have questions, please put them into the questions area. And if folks could just, in the chat, confirm that you can see the screen that we have up. We're going to go ahead and remove all of ourselves in a minute from our video screen, but for hopefully right now you can see me. Good morning, it's Shefali with Giving DuPage, as well as Hugh Elliott, Ron Markland, and Becky Michael from Dugan and Lopatka. They are a local CPA firm, and in my view, they are excellent experts on nonprofit accounting and support for the nonprofit organizations in the area. They have been a partner of Giving DuPage for quite some time, and it's a testament to the power of relationships. I think Hugh, we met each other at a Choose DuPage function a couple of years ago, and we just ended up coming and meeting with the accountants there. I am grateful to them because they are our accountants, but they also really help me because as you can imagine, 990 audit prep, these things have me breaking out in a sweat whenever I hear these topics. And Becky is the nice person who gets to handhold me and make me feel calm. And hey, you got this, Shefali, we could do this. And so that makes me feel good to know that I have an accounting partner in them. If you have questions, again, share them in the chat or in the questions area, or if you have a comment, share it in the chat. I'll be monitoring those. We'll go ahead and get started. Hugh is going to do a quick intro of everyone. I'm going to hand it over to you guys. Thank you all for joining us, and thank you to Dugan and Lopatka for your expertise today.
Okay, thanks, Shefali. And actually, thanks for setting this up. This is awesome. It allows us to kind of do a primer before we enter our nonprofit busy season. So all of the junior ends, hopefully this is going to provide some value to you. A little bit about DNL. So as Shefali mentioned, we're about a 40 to 45 person firm. We're in Warrenville with a specialty practice in serving nonprofits locally. So Ron and I are both audit partners at DNL, and Becky specializes in reviewing and researching 990 issues. So those are the issues we're going to cover. We're going to kind of within those categories, we're going to be a little bit random, because what we want to do is cover the areas that we see need the most focus to improve efficiency and avoid mistakes. So that we're going to try to concentrate on those. We want to try to help this process be as efficient as possible, and then also avoid management letter comments and any of those nasty internal control comments we might put in your management letters. So with that, as Shefali said, the slides will be available to you after the presentation. I'm going to go ahead and turn my monitor off now so that we can concentrate on the presentation. Okay. So Ron is running the show here. These are our information, which will also be up at the end of the presentation. So we're going to start off with getting ready for the audit. So if your organization is a 12/31 year end, you've just recently gone through this probably. If you're like most nonprofits, or the majority of nonprofits, you're June 30 year end and you're getting ready for your audit. So we're going to do our first polling question. We only have a couple of them, but the polling question, if you could bring that up, Shefali, is
sure. Here we go.
What is the public support threshold requiring an audit by the Illinois Attorney General's office? So if you have more than this amount of public support, the Illinois Attorney General office wants to see an audit with the Illinois 990.
Okay, so responses are coming in.
Yeah, Shefali, just let me know when you're good there.
Yeah, about 56% of the folks have responded already.
Okay.
And it looks like 31% have listed 150,000, 44% have listed 300,000, and 15% have listed 750,000, and 7% have listed $1 million.
Okay, so The majority got it right. The requirement is $300,000. So a lot of people think that's a low amount, but that's what it is. So if you have more than $300,000 in public support in Illinois, you need to attach an audited financial statement to your 990. Okay, but we'll get started with the with planning for the audit. So we're going to show a slide here that will show several slides that show what are the things that we should talk about during the planning meeting as we get ready for these audits. So the things that we put on our agenda are, we want to talk about any significant changes in personnel, programs, the board of directors, accounting systems and processes, and new accounting pronouncements. One of the things we recommend as a best practice, Ron, can you go back just one, is that you have documented the accounting systems and processes in some type of narrative or flow chart or something that would show us who does what and who's authorizing and approving these transactions, who has oversight. But basically, it's who does what. So you can show us that there's a segregation of adequate segregation of duties, and it's a requirement that we have from the AICPA. So in a lot of cases, we've already done this, or we've done it in conjunction with you in the past, and it just needs annual updating. Okay, so next slide. The other things we also will talk about at the planning meeting are preliminary analytics. How is the organization done compared to the previous year? How is it done compared to budget or forecast? We also want to review prior year estimates to see how accurate those estimates were, so that we know that we can rely on them going forward. Those estimates might be valuation allowances for receivables or inventory if you have it, or potentially be privately held investments, things like that. The other thing we want to do is review prior year management points with you to make sure that if there were any like internal control weaknesses noted last year, that those have been corrected if possible. We'll also have the fraud discussion. So as most of you know, we've been through an audit. We have to have a fraud discussion as part of the audit, where we ask, are you aware of any fraud? What types of internal control weaknesses have you noticed that could potentially lead to fraud, or fraud that may not be discovered in a timely manner? So we have to have that discussion with an employee, somebody from management, and then also somebody on the board. Usually we would pick the treasurer or somebody like that. So we do that as much as possible at the planning meeting as well. And then we also identify the person with skills, knowledge, and experience who's going to be responsible for telling us, okay, these are the financial statements that we're giving to you. To our best knowledge, these are accurate and correct. So the next slide, we'll also discuss the training requirements and logistics. One of the things, so depending on where a nonprofit gets its funding, there are going to be different reporting requirements. So there are various state and if you get FUD funding, if you get PHS funding, you may have different requirements other than just the basic audit. You may be required to have a single audit or public audit. So we'll also look at the board meeting schedule and consider staff vacations and all that. So if you have a deadline of you need to have your audit done by whatever it is, October 15th, September 30th, we need to try to work backwards considering all of these requirements, the board meeting schedule, where they would approve the audit, when your staff is going to be on vacation, et cetera. And then this year, we also need to consider how are we going to actually physically conduct the audit with the COVID restrictions and social distancing. So we're in the process of discussing that with our clients now. Are we going to do the entire audit remotely? Are we going to come out there for part of the time to do the interviews and some of the other testing? So what we're doing is trying to just make it as accessible and convenient for our clients as possible. And yeah, also, do you have the physical or the facilities that will enable us to socially distance while we're at your location for the audit? So those are all things to work out now. That's something new this year, obviously.
Hugh, I just want you to know that your voice is cutting out a little bit. Maybe if you're moving around a lot or if you're on a microphone with your computer. So just keep that in mind when you're chatting.
I should have put a headset on. Okay,
You're good.
Ron, it's I think you're up next here.
Okay. So most organizations, well, their main goal is to try to avoid a management letter. And most organizations know that one of the things to avoid a management letter is to have proper segregations of duties. But they also tend to forget another management letter requirement. If there's a material audit adjustment, that will be considered a management letter as well. And so the next couple of slides are just some good examples of how to avoid a material audit adjustment or to help make the audit move more smoothly at the end so we can meet the board deadlines or the funders' deadlines without a mad rush from all parties involved. So the first thing you always want to make sure is that your net assets accounts, which are sometimes not called net assets in your accounting system. Sometimes it's called fund balance, sometimes it's called retained earnings, sometimes it's called opening balance equity. It really depends on how you set up your accounting system on day one. You want to, but most of the time those accounts are like in the 3,000. You want to make sure that the 3,000 accounts and the trial balance as of your fiscal year end, so we're just going to go with 6/30, as of 6/30, agrees to last year's audit report in net assets. If those two numbers do not agree, that there was an error someplace, either the audit adjustments from previous years was not recorded, or something was posted into the Fund 3000 accounts that should not have been posted. Another item you want to take into consideration when you're getting ready for the audit is the functional expense allocation. Some organizations, especially the smaller not-for-profits, really don't have to worry about the functionality allocation, like between program, management general, and fundraising until the end of the year for 990 and audit purposes. Because board members like the national classification, maybe if they're keeping track of some grants, it's easier to do from an Excel spreadsheet. However, when you get ready for an audit or getting ready for the 990, you should start considering how you allocate your functional expenses. How much salaries are being allocated between program and management general and fundraising. Some of that could just be based on time and effort studies. Another thing you're going to want to focus on is revenue categorization and restrictions. Are you guys keeping track of restricted net assets, especially at the end of the year, to show what the ending net asset balance should be as of June 30th? What a management letter tends to be in this area will be if somebody promised to give you a pledge in June, but you didn't get the cash until July, or it's a 3-year pledge of $25,000 each year. That's going to be $75,000 as of June 30th, and that's a material number. And if you don't record it before the audit comes, it's going to be hard for us as the auditors not to write a management letter under the auditing standards. Another thing is just to keep the audit moving process is good in-kind revenue and expenses. Have you kept track of that throughout the year, or can you get ready for that during the audit planning process so that it's easier for us to wrap up the audit and get that entry in before you have to give it to the auditors as a trial balance? Another thing you're going to want to take a look at is making sure your accruals for payroll, vacation, and prepaid, if you have some prepaid expenses, are they recorded or are they the same balance as last year? If they're the same balance as last year, then you might want to take a consideration of looking into that account before you give those accounts to the auditors to help avoid a audit adjustment. Depreciation. Most auditors maintain a client's depreciation schedule because we have softwares that is easy to obtain. However, management can always just use the same depreciation expense as last year. That will be materially close enough that you will avoid a management letter. So don't be afraid to just record the depreciation adjustment, same as last year, in your general ledger at the end of the year. And then when the auditors rerun the depreciation for fiscal year 2020, the difference between 2019 and 2020 depreciation is not going to be material enough for that to be a management letter. And it'll also give you guys a more adequate trial balance when you present to the board at the end of the year what your final numbers are. The last 2 points here are just good points to just before you're ready to give a trial balance to review your current TV and compare it to the last year's TV. Want a comparison, trial balance, and your accounting software. And does the numbers look sense to you? Can you explain the fluctuation? Like, oh yeah, prepaids are up this year by 20,000 because I made a deposit for my gala that was going to be in the fall in June instead of last year when I made it in July. Or accruals are going to be higher because we had a timing of the payroll vacation. Payroll timing was more 10 days of payroll instead of 3 days of payroll. And then the last thing you will want to take a look at will be the prior year adjusting journal entries. Make sure that you have recorded those entries again this year to help you avoid that management letter. So if last year we recorded your payroll accrual, this year make sure you recorded it to help us record that audit adjustment. Does anybody have any questions so far? Any questions yet?
Yep, there are a few questions. There's actually one question, and Trisha, I saw that you had your hand up. If you could type your question, if you have a question in the questions area. But the one we got from Kim was, what about the PPP and government grants when addressing salaries?
You shouldn't double dip. That I was on a conference yesterday, and the federal government issued a memorandum. So the Office of Management and Bureau issued a memorandum to all of the federal agencies, and they're saying to them that they should establish a standard in all of their grants that they need to be cautious of any funds that's being charged to the federal grant should not also be charged to the PPP loan. It needs to be one or the other. You can't charge the federal government an expense twice. And the PPP loan is coming from the federal government. That guidance came out last week from the OMB.
Okay, good. So the answer is OMB issued guidance that you can't double count when you have federal dollars. So either to the PPP or to the government grant. If you have a follow-up to your question, let us know. And also you'll have contact info for all three presenters at the end that I can share with you guys. So if you want to do a little bit more digging in, we can do that for you. Feel free to continue to share your questions, but for now, those are it.
Okay. All right, Q, I'm going to get it back to you. Another thing I want to focus on for material, making sure.
As Ron was mentioning, so he was talking about significant audit adjustments. And so just so everybody knows, if we come in and do the audit and we find things that require significant or material audit adjustments, the rule from the AICPA is that that's an implied material weakness in internal controls, and we would have to put that in a management letter. So what we're trying to do is avoid these types of adjustments and avoid those management letter comments. And then another thing kind of related to new accounting pronouncements that Ron was talking about with the in-kind, one thing we see with some of our clients is they record in-kind volunteer hours, but there's a two-step hurdle that you have to get past to record in-kind volunteer hours, and that is you have to have otherwise would have paid for that service, and it has to be a professional service. The examples they give are like lawyers or engineers, or if you're an animal shelter, maybe it's a veterinarian or something like that. But people who like take tickets at the counter or volunteer at a fundraiser, those are not in-kind volunteer hours to record. You can put them in the footnotes, but you can't put them in the financials. So moving on to the new accounting pronouncements.
Actually, let me just jump in real quick. There's an in-kind question, so I want to ask it right now.
Sure.
Mike was asking, do you know what in-kind per pound rates to be used for in-kind donations, pounds to dollars? So clearly this is maybe like food donations or something, but he's asking about in-kind donations, pounds to dollars, and what rates to be used.
So we look those up depending on what it is. If it's food, there is a dollar amount that's posted actually by one of the big 4 firms that everybody.
Feeding America has a good one.
Which one?
Feeding America.
Oh, right. That's right. No, that's right.
Oh, Feeding America has a rate to use. Okay.
Yeah. And that actually yeah.
And then Ron, really quickly, Kim had a follow-up question on the PPP. So she asked, what if you have a corporate grant? How is that considered against the PPP? So she's asking specifically about a corporate grant and how is that considered against the PPP? And I think initially her question was around salaries.
Okay, the corporation grant is considered just like a contribution, and what most people are probably going to just treat it is there's no guidance that says you can't double count for corporation grants and the PPP loan because it's more of a not as regulated. So I recommend is still not counted, but you could probably ask them, corporations, see if they're willing to allow you to charge that salary to the grant, even though it's reimbursed through the PPP loan. Or you can see if they'd be willing to rechange the budget a little bit to help you cover some other costs. It's just a general trend for the PPP loan is to really don't charge grants for the same one as you do for a PPP loan. Like, the PPP loan is going to be treated more like a forgivable loan grant. So you should follow general grant accounting. But with grants from corporations and from private foundations and from donors, you can choose how to allocate the expenses to whatever grant you want to allocate it to. So I hope that's a question. Otherwise, Kim, just give us a call and we can expand more. So
okay, great, perfect, thank you.
Okay,
that's it for now.
New accounting pronouncements. Revenue recognition is the big, one of the biggest new accounting pronouncements that's come out in recent years. It was effective for 12/31 year ends. So if you were a 12/31/19 year end, you've already gone through this. If you're a 6/30 year end, hopefully, you've talked to your audit team about this in the past and you're ready for it. Initially, we thought this wasn't going to impact nonprofits as much, but it really does. So the overall concept of the new pronouncement is that you identify what your performance obligations are, and then you assign a revenue value to each of those. So if you're a membership organization, for instance, and you charge an annual membership due, you need to identify the different components of that membership dues, because that may entitle the member to a discount on a conference, some education materials. It may get them, access to some other things. It may get them advertising, whatever it is. You have to say, okay, these are 4 or 5 things. If they're paying $1,000 a year, 200 is allocated to the conference, 200 is allocated to the publications. And then you record the revenue when you've met those individual performance obligations. So this really kind of makes things a little bit more difficult in terms of revenue recognition, and it's going to add a lot of disclosures to your footnotes. So I'm not going to get into the weeds, but if you're a membership organization, or even if you have any kind of fee for service, you really need to think about whether you're in compliance with the new revenue recognition standard. The other one is the lease standard, and we've been talking about this for several years. It just got delayed another year because of COVID, so it's not going to be effective until year ends 12/31/22 and after. What this does is it puts every lease on the balance sheet. So if you're leasing a building or a copier or anything, you're going to record a right to use asset and a corresponding liability that's equal to the net present value of the remaining lease payments. And this was done by the FASB just to get us in alliance with international standards, because that's what they're doing in Europe and other countries. So this was one of the last big hurdles to get international standards more in alliance with US standards. So that is coming. If you have a lot of leases, it can be a lot of work to administer that. So that's just a good thing that got pushed off another year. I think that's all I had on the accounting pronouncements. Ron, you're going to do the contributions,
Yeah.
right?
Yep. So one of the new standards that's going to affect almost everybody on this webinar is a standard that came out for grants and contributions. All of this standard, which is not getting deferred, it is in effect as of right now, is to provide more clear guidance to non-for-profits and how they should treat a transaction, specifically governmental grants, whether it should be considered an exchange transaction, which would then be more like a fee-for-service membership dues, and you'll follow under the standards under the RevRec, which is just what you talked about, or is it going to be considered a contribution, and you follow the standards for a normal non-for-profit contribution. And the reason why everybody wanted this more clarity was because of governmental grants, because there was a difference in practice and how governmental grants was being treated. Under the new standards, almost every single governmental grant will be considered a conditional contribution because the government is not getting the benefit of the services provided for that to the non-for-profit. Many governmental grants are providing services to a third party, like for example, a homeless shelter providing benefits to the homeless and not to the governmental entity. A youth camp or youth services providing counseling and other services to the youth. That's not a direct benefit for the government. However, there are still some governmental grants that will be considered an exchange transaction, and that will be more like Medicaid, Medicare, rental income that from HUD for those who have public housing. If you are getting services, like if you're providing mental health or development disability centers, or if you're providing rental assistance, and it's really the government is paying the service on the behalf of another individual, that will be considered an exchange transaction, and you will have to follow all the disclosures that she was talking about. But if you're just doing a normal grant transaction with them, then it will be considered a conditional contribution. And a conditional contribution has two items to follow: a right of return asset and a barrier to overcome. Now, yesterday I was at a webinar that once again they gave you for those who have PPP loans and you are a non-for-profit, you are allowed to consider, if you believe the loan is going to be 100% forgiven, to consider the PPP loan as a governmental grant with some conditions. And the conditions have some barriers to it. And most governmental grants or foundations, if they have a barrier, will have these couple of items. A barrier must be measurable, which means that you have to be able to document and determine that you have met the barrier. Most, for example, is like you must incur expenses like salaries or pay the rent. And you only have the ability to use the grant funds for that specific purpose. So if we're looking at that PPP loan, you have a measurable and a limited discretion. You can only use it for payroll, rent, and utilities in a certain time frame. And then a certain event must occur is another way that a barrier follows. And a certain event for the PPP loan example will be the full-time equivalent numbers. Do you have that same number of full-time equivalent as you did in that arbitrary 12 months in 2019 to the 8 weeks or the 24 weeks? You must meet both of those barriers or you can recognize the grant contribution. However, if you just have a barrier from a foundation that says you must submit if you have a right of return asset, and the other barrier is you must submit a year-end report to show that you provide that accomplishment, that is a trivial item and it is not considered in a barrier. Okay, so that I think the new standards is going to make government grants more easier, but it might make foundations a little bit more trickier because some foundations will have a right of return asset and some foundations will have measurable barriers. Like for example, they might have a barrier of saying you must provide 100 meals to the homelessness. You can't recognize that foundation grant until you have met the 100 meals information. So when you get closer to your year end, it's going to be important for the accounting office and the development office to really look at some of these foundation grants to see if they can recognize the grant or not recognize their grant. Otherwise, if the auditors come in and it's a material number, you might get that management letter again. Does anybody have any questions? Otherwise, I think we have another polling question.
We do have a question. There was a question that Judy asked regarding would building rents and leases be included? And I did ask Judy to give a little bit more information. I think maybe the question was attached to the leasing stuff with the accounting guidelines, or I wasn't sure if she was asking about building rents and leases for the PPP.
That would, if it was related to the lease standard, then yes, a building lease would be included in that standard. Leases are.
Okay, great. Yes, she clarified, yes, it's attached to the leases question. So the answer is a yes, right, Hugh?
Right. So with your building lease, you're going to have to record a right to use asset and then a corresponding liability on the balance sheet 2 years from now.
The only time you wouldn't is if it's only a 12-month lease or less.
Okay, great. I'm going to launch that second poll for you guys. Let me go ahead and do that. So the question is about the original due date of the 990. Pick your best answer, folks. What do you think it is? Poll is in progress. About 16% have voted so far. Okay, I'm going to go ahead and close the poll. It looks like for everyone, the answers so far are 6% felt like it was 2.5 months after year end, 32% said it was 4 months after year end, and 58% said 5.5 months after year end, and a few folks, 3% said 10 months after year end.
So I'm counting on that. I'm not sure we got that set up right. Becky, isn't it 4.5 months?
Well, that's what I was talking about earlier. It depends on how you look at it. It's 4 full months and 15 days. So January,
Right.
February, March, April, and then 15 days in May.
That is a trick question. I feel like you guys really were
It
trying
is.
to.
You know, I must have given you, maybe I gave you the wrong ones, Shafali,
Yeah.
but it's 4.5 months. So nobody got it right.
Yeah, well, that's true. So this is actually a good thing. So 4.5 months. So if your fiscal year ends December 31st, then it's based on that math.
May 15th then.
May 15th. Thank you.
Yeah. Sorry about that.
And then
All
the
right.
June 30th are due November 15th.
Right. Right. Okay, so I'm going to go through kind of quickly. I think everybody probably is pretty familiar with the various 990 forms, but we'll go through them quickly. And if you have any questions, make sure to write them out. So what federal 990 should you be filing? If you're under 50,000 in average gross receipts, you would file the 990N. That's a postcard, e-postcard basically, with very little or really no information on it. It just tells the IRS we're still here, we're still in operations, and that's it. There's not much to it. If you have gross receipts of less than $200,000 and total assets of less than $500,000, at the end of the year, you're allowed to file the EZ form of the 990, which is, again, that's much easier than the full form. It's got less information, takes less time, so that's all good. But then you have to file the full 990 if your gross receipts are over 200,000 or your total assets are over 500,000 at the end of the year. So that's requiring the full 990. And then there's a couple of other 990 forms that you might potentially need to file. And one is the 990 PF, and that would be filed if your IRS determination letter says that you have to file a PF, like for instance, if you're a private foundation, that's what the PF stands for, you would do that. But there's some other circumstances where you might file the 990 PF rather than the 990. And that is if you fail your public support test. And we've listed here what the public support test is, but basically you have to have 33 1/3% of your total support come from the public to pass the test. And then there's also a limitation on major donors, and also board member contributions from board members don't count toward that. Becky, correct me if I'm saying any of this wrong, but and then the 990 PF is filed in the second year that you fail that public support test. So that does happen. We do have clients that fail that public support test. You know, if some of their, you know, for instance, they may have some larger facilities that they rent out or something like that. They may fail their public support test and have to file the 990 PF. Then there's also the 990T, which is where you report unrelated business income. And this would be filed in addition to the 990. So if you have income that's not related to your mission or your purpose, such as, you know, the example they give in the IRS guidance, I think, is a parking lot rental. If you rent out your parking lot on the weekends, then that is considered unrelated business income, and you would file a 990T. But there are definitely gray areas in as far as what is unrelated business income. So it gets to be a little bit of a challenge sometimes. Is there anything to add on that, Becky?
No, I think you said everything correctly. Just with the unrelated business income, there's a lot of exceptions, and that's definitely an area we need to dig deeper into when you have new revenue streams, I think.
So Becky, what are some common exceptions that you've come across in this unrelated business income area?
Well, mostly it has to do with rental of property. So that's an exception. Other ones, not too much, like royalty is an exception.
Okay, so it sounds like for our nonprofit role, probably the rental could be a
Yeah.
possibility.
Yes, definitely.
And then moving on to what state forms should your organization be filing? Well, if you're in Illinois, you're gonna file the Illinois 990. But actually, before that, you need to register in Illinois. You need to do that. You would fill out a form CO1 with the Attorney General's office. There are certain organizations that don't need to file or registered with the Attorney General's office, and those are listed under B there on your screen. Not too many of those. Then on the next screen, there is an exemption for religious organizations that do not need to file the IL 990. So if you qualify as a religious organization, you don't need to file that. And then we have the note there that you need to attach the audit if your revenue is greater than 300,000.
So I want to just
Sure.
let you know that revenue includes not only contributions, but it also includes program service revenue. And I know that trips people up sometimes.
The other question we got on this is investment income unrelated income, or is it considered unrelated business income, investment? Any income from investments?
Technically, it's considered unrelated, but there's an exception out there, and therefore it is not subject to tax.
And Leslie, if you have another follow-up on that question, feel free to type it into the chat.
And then there's also the Illinois 990T that you would also report your unrelated business income in Illinois on. And then other states, so as we haven't, Ron, if you advance to slide 1, there are 39 other states in the District of Columbia that require organizations to register before they can solicit contributions in their state. So just know that if you're going into other states, there's a good chance you need to be registered in that state before doing so. We're going to move on to the board of directors. So this is information that is required to be put on the 990, and this is an area where we have some questions every year, and some of the information that we get, we have to go back and ask for it in a different format or get it corrected. So basically, when we're reporting the board of director and officer information, the benefits that they get, we need the employer portion only. We can't use the amount on the W-2 that's in box 12 because that would have both employer and employee portion. The benefits that do get reported on the 990 are health, dental, vision, life, parking, cell phone, etc. And when Ron and I were talking about this the other day, and Becky probably doesn't want us to say this, but if you don't have the exact number because you're a June 30 or some other fiscal year, and it's going to take you forever to get what those benefit numbers are, I would say go ahead, if you can get it close with a guesstimate, without having to go back to each payroll and verify what those benefits were, that would be close enough. But Becky, close your ears on that.
Wow, that sounds like it could be a heated debate at Dugan Wapanka.
Oh gosh.
All right, sorry, keep moving on. Apologize.
Oh gosh.
And then same thing on kind of on the next page, reporting wages. The reporting wages when we do report the wages, those do come from box 5 of the W-2, and those are required to match. The IRS will match those, especially if it's a calendar year end where you're reporting the W-2s. So moving on, some other information that's required to be presented on the 990 are the top financial official should be reported on the board of directors list. That would be the person who has ultimate responsibility for the organization's finances. Usually that is the treasurer or the CFO. And then the other top management official would be the person who has ultimate responsibility for the implementing decisions of the organization. That would usually be the executive director. So one of the things though with smaller organizations is sometimes you may only have one top management official. You may not have a separate finance official, which is okay. Is there anything to add on, Becky?
Yeah, I just want to make sure people know that we are also reporting the wages and benefits for the top management official and the top financial official. Sometimes that's something we have to go back and ask for. So it's more than just the people who are on the board.
Right.
That's it.
Okay, and then for the board of directors, so we need to list the board of directors who are actually members during the fiscal year. So whatever your year is, if it's a 12/31 or June 30th, we need to list all the board members who were board members during that period of time, during that year. And the list should only include the board members who have voting rights.
With the exception of the executive director or CFO.
Okay. Becky, do you want to talk about former? This was your slide, actually. I think you had a point about.
Yeah, this is just a question we get a lot. Former can be used two ways on the tax return. First, if you have a fiscal year, sometimes the board changes during the year, and we'll use the term former to represent maybe like a past president versus the current president. And then the other thing that the IRS is looking for is in the position box, there's a box called former. And if we check this, this is telling the IRS that they weren't a current board member this year, but they are still getting paid during this fiscal year. And that's really it.
Okay, so then I think that moves on to you now, Ron, with contributions.
In the next couple of minutes, we will be talking about contributions, and you would think contributions, financial and 990 will be relatively the same. There are two areas that it is not the same, and one is in relation to donated stack and financial statements, so GAAP. If you get a donated stack and you sell it within 2 to 4 days afterwards, you can consider that as considered a cash contributions. And that in the 990 donated stack is stack, not even if you sell it in 2 days. And the reason why that's a big difference is because there's some more information you need to disclose for donated stack, and that is why there's sometimes we as auditors will ask for more information after the fact, because we don't consider them as donated stack until the 990 prep begins. Also, income contributions. Normally you have donated rent, donated services, and donated supplies. Donated rent and donated services are not part of the tax return. So it's really great if we could always figure out breaking out that information. And then the only thing that gets recorded on the tax return is donated materials. So there is a reason why sometimes revenue 990 on the page 1 will not agree with the revenue that's reported on the financial statements. Also, please focus on the fact that when you do give us a list of donors over 5,000 for Schedule B, it should be in the same accounting method as the financial statements. So whether if you're on a cash basis, the 990 should be on a cash basis. If you're on an accrual basis, it should also be on an accrual basis. That was a quick overview. The next one is fundraising events. There's a lot of slides in this section. A lot of tools help you guys when you guys are getting ready for the audit to give us the information that's really needed. Schedule G is probably the most difficult form that gives everybody, the preparers, the references, the clients, the most headache. And some of it is just because we don't track it the same way in the accounting ledger as we should for the Schedule G. The IRS is really focusing on is a not-for-profit really taking into consideration when they have a golf outing or a gala, how much of the ticket price for that event is a contribution and how much of it is for an exchange transaction or for the benefit. They call it the quid pro quo event. Example, you got a gala, the ticket price is $200. $100 is what the value is for the food, the beverages, the entertainment that the individual gets. Then the other $100 will be considered a contribution. The Schedule G is trying to break out how much of your total ticket sales price is contribution and how much of it is for the event. That is the main reason for the breakdown of the revenue. And the only way to get that information is if the development office, and it's probably more on the development office side, keeps track of it when they prepare the event. Auction items. Silent auction items is another event that tends to be a little bit tricky because accounting-wise, you just show the fair market value of the proceeds of the auction item. But for the IRS and the 990, they view it as two transactions. One transaction is when the donor donates the item. So if somebody donates 4 sporting events tickets, what is the fair market value of that event? That needs to be tracked in an Excel spreadsheet or for that value. And that's considered a non-cash contribution. Then the second transaction for the 990 is when you actually sell it at the gala event or the golf outing. How much of what is the value of that item? Then that helps you determine whether they get a contribution or if they don't get a contribution. For example, if the fair market value of 4 sporting events was $500, but somebody won the auction for $200, there is no value for that, no contribution. If it's the other way around, if they pay $700 for the fair market value of a ticket and it's only worth $500 fair market value, then there's a $200 contribution. That's the reason why we have to break it out, because the IRS wants to basically see the non-for-profit tracking that, because that really affects your donor's contribution listing of it. Becky, do you have any comments on that?
No, you said it great.
All right. Raffles, once again, it's really only one transaction, just kind of 2 transactions. Same thing, you recognize it as a non-cash contribution for the 990. Remember, the raffle ticket has no contribution element, and then the proceeds are just recognized as cash contribution. The remaining slides and the fundraising events it should be a great slide for you to keep track of what you need to get for the Schedule G, which is once again probably the most time consuming. The reason why the 990 gets delayed from getting finalized is getting all this information. So take the next 4 slides and give it back to the development office to help them set up an Excel spreadsheet to track it this way. And if you track each event by line item F for the income and then line item 8, it will make the process of completing the Schedule G and the 990 a simpler path for all of us. This is information that should be tracked at the time of the events and not 8, 9, 13 months after the fact. Does anybody have any questions on some of the 990 items?
No questions so far, but I feel like those 2 slides were really, really important. You should share this is gonna be like the cheat sheet. Like every development director should get those 2 slides or those few slides. And such a great point to monitor those expenses or monitor all those financials with the event rather than after the event trying to remember or capture the information.
Yeah, I think that's the longest delay we see in getting the 990s to our clients to get them to the board for review is getting the information for the Schedule G. Because sometimes if you do a gala in February, well, let's just talk about a golf outing. Most golf outings are done in some are done in August and July. And if you're a June year end, we're not asking for that information until after you've completed the 2021 golf outing or the 2020 golf outing, and you get confused on what year you're looking for. So if you just use these two slides as a way to make sure you keep track of it, you will be good in that situation.
So just giving you guys a time check, we're at about 5 minutes to 10. You have a couple of slides left to go. And so we'll go ahead and keep plugging through, and we'll take questions at the end for folks who can stick around.
Okay. So this is a reminder for the state of Illinois. This slide basically reminds people kind of where you remember things where to file. The Illinois AG 990 gets filed with the Illinois Attorney General. And after you file that CO-1, that's kind of like the state 990. It goes to the charitable department of the Attorney General. The Secretary of State, the only thing you file for the Secretary of State is an annual corporation thing that is an online form that is not no part of tax preparation. That's something that's more of a legal document, and most not-for-profits can complete that by themselves by just online. And obviously the IRS is where the 990 federal form goes. Becky, I need your help a little bit. The Illinois Department of Revenue, they only get the 990T, right?
I'm sorry, can you repeat that?
The Illinois Department of Revenue only gets the 990T. That's it. If you have
Correct.
it.
Correct.
Yeah. So the state of Illinois return goes to the Attorney General because they're the agency that's in charge of overseeing non-for-profit status. And then the AG 990, they do not accept postmark dates like the IRS. You have a AG 990 that is due June 30th, and that's for your 1231 year ends. You need to get it in the mail by the 25th to make sure it is on somebody's desk by the 30th. Because if you're late, there's a $100 late fee. And we have not been successful at all in getting that $100 late fee abated from somebody. Also, the AG 990 cannot be e-filed. They do not have that function. And it requires 2 original signatures, which has made it a little more complicated for our 1241 year end, as the stay-at-home order has complicated that process. But that's just how the state is requiring it, is that they require 2 original signatures. They do accept photocopies a little bit now, but not electronic signatures, and there is a difference. So that is all we have. Does anybody have any questions?
Let me take a look here. I don't think we saw another question. Leslie agreed that the fundraising event slides were great. I agree with you, Leslie. And we have no other questions or comments in the chat at this time. Feel free to add those if you have any. I'll ask one question. What's sort of the most common mistakes or lack of information gathering that we as nonprofits make? Becky or Ron, anyone who, whether it comes to the audit prep or even preparation for the 990 and having our information in a row, ducks in a row, what are the common mistakes that we make?
Well, for me, hopefully I got them onto the slides. It was the benefits for the officers and the board members, the fact that we only need the employer portion, and also Sometimes people give us calendar year when we need fiscal year and vice versa. And fundraising is by far the biggest one for the 990.
And so can you elaborate a little bit about that, Becky? What is it, the stuff that Ron covered in the slides? Like, are those the most typical issues?
Correct. Everything that's in those slides. Hopefully I was able to bullet point everything that we need.
Very good. So on the tax acknowledgement, like you talked about the quid pro quo, Ron. So let's say like you said, there are, someone bought $200 tickets to the gala, $100 was food, beverage, entertainment. When we write the tax acknowledgement receipt, are we supposed to only write the value of $100? So the net real contribution, is that what we're supposed to include in the tax acknowledgement letter that we sent or receipt that we sent? Or do we indicate what they paid for the ticket?
Ron, do you want me to take that?
Yeah, you can take it, Becky.
Okay, so if you're just talking about the tickets, no, you're going to acknowledge the amount, total amount that they paid, and then you're also going to, in a separate statement, say what the fair market value of the goods and services were that they were provided. And then it is their job to figure out the contribution.
I'm
and
not
to report
sure.
it
I'd
correctly.
be very interested to know how many people include that separate statement.
Oh, it's required by the IRS. You can be fined for not properly including it in your letters. Some people will just go ahead and put it right on the form when they purchase the tickets. I mean, there's many different ways you can get the wording in there, whether it's on the receipt or when they purchase it. But it is required by the IRS to be on there.
Which is why that Schedule G is that if you're filling out that Schedule G correctly, it gives the IRS some confidence. Are you filling out that letter correctly? Because, correct me if I'm wrong, Becky, but that's kind of what the main purpose of that Schedule G.
Oh, yeah. That's exactly what the main focus is. And then, you know, there's a same issue when you auction off an item. The organization, when you send your letter letting the donor know that they bought the item at $500, you are also required to give them your best estimate at what the actual fair market value was for that item, so that then the donor can report the contribution, or might not be a contribution, on their 1040.
And that's a common misconception when we're doing personal income taxes and somebody buys something at a raffle for a charity event. They always think that the whole value is deductible, and it's not. It's only the amount that's over the fair value of what they bought.
Correct.
We get people who give us their 1040 information and they're like, well, I get to deduct all of this, and you have to tell them no, you only get the excess.
Yeah, I think you're right. That's a common thing happens, especially even with races and stuff. So if anybody has any questions, please feel free to add them in the questions area. We are at 10:04, I think. So we can wrap up, but if we'll stick around for any questions that folks have. And I see that you have your hand up. If you want to go ahead and enter your question in the questions area, that'd be great. Otherwise, we can call it, and then after we get the recording, I'll send a link to the recording as well as the presentations too. I have Jerry and Jennifer who had questions. You have your hands up. If you can, just write your questions in the chat area if you can, or in the questions section. For virtual gala, so Anne's asking, for a virtual gala, there are no tickets or tables, therefore is that considered all donation? So they're asking, nowadays, a lot of the nonprofits have moved to virtual events or virtual fundraisers. So there's no ticket, there's no table, they're technically not getting any food or anything like that. Is it all considered a donation value or contribution?
It sure does sound like it. And this is not like an online auction, correct?
Correct.
Yep, contribution.
So Anne, if there is some sort of online auction feature or virtual auction feature, then you might run into those auction item slides. So other than that, it sounds like all of it is contribution. Jennifer's asking, running a new organization, is there both a state and a federal 990?
Yes. So the federal form is called the Form 990, and Illinois is called the AG 990-IL.
But first you gotta be registered, so that's a CO-1 first.
That is correct.
So, because a lot of times the attorneys will fill out 1023 to get the non-for-profit, the 501c3 status. But the attorneys will forget to register them with the state of Illinois. And then Becky will submit the 990, sign it for the AG 990, and it gets rejected because the state doesn't know you exist. Correct, Becky? That happens a lot.
Yep, it happens a lot. And then the late filing fees start racking up.
Yep.
So Jennifer's asking, when is the Illinois AG 990 due?
It just reports your assets, your income, your expenses, your top 3 paid employees, and your top 3 financial institutions.
Oh, she's asking when is it due? When is it due?
Oh, when is it due? I apologize.
That's
So it's due a month after the federal. So we were just talking about federal return is due 5/15. The Illinois return would be due June 30th.
and
Or
then
12/31 year end.
sorry, so 12/31 year end. So
Yeah.
so it's a month after your federal is due.
Month and a half, yeah.
Month and a half. Okay, month and a half after the federal is due. And then Anne is asking, Anne has to follow up about the virtual question. She was saying yes, but is that anything different from prior years? So Anne, it is different if you didn't have a virtual event before, then it is different in the fair market value or the actual contribution versus other goods and services you receive. So maybe you can ask a follow-up if you have it.
So this year, that the virtual gala would be, it'd be 100% contribution, whereas before only a portion of it.
So Anne's asking, but silent auctions are the same as prior.
Correct.
Oh.
Silent auctions are the same.
So she's saying yes, Anne. Silent auctions are the same rules apply as before. Any other questions that folks have? Are there any other thoughts around virtual events? Because as I said, a lot of nonprofits. So for the presenters, are there any other thoughts around those? There's a lot of nonprofits obviously are pivoting to virtual events.
Virtual events, I think that's going to be, if it runs successfully, you will see that you have a lot more contributions and less expenses. It helps really reduce the cost of your expense, but it does take some extra effort in that marketing portion of it. But you will save a lot more on that expense side of it.
And Deborah is asking, I guess with some of the virtual events, the nonprofit organizations are offering a curbside meal. How would that work with the ticket and the contribution?
Well, they're receiving something in return, so it would be the fair market value of the meal. And then again, for the fair market value, that's not the cost that you got it for, the organization got it for. Sometimes the organization will get like meals at a discount. The fair market value is what I would go out and purchase that meal for. So that's another distinction you have to keep in mind. It's not your expense, it's what it would be to the general public.
That's a great point. That's a great point. Okay, I don't see any other new questions. We'll of course stick around for a few minutes in case folks have any. And let me take a look at the chat really quick. Yep, there's no news, new information on the chat. Please feel free to enter your questions or hop off if you guys are done with any of the information, but otherwise we'll stick around for a few minutes. Here's another question that came in. Have any of the due dates changed due to COVID-19?
Yes, they did change, but it was for a very short window. It would be ones that were during the COVID period are now extended to 7/15. So if you had a return due May 15th, it wasn't due till 7/15. However, you still have the full IRS extension. So I'm not sure it really helped too many people in our arena.
So I thought, sorry, go ahead.
The original due date is 4.5 months, but then you have another 6 months after that for an extension.
Yeah.
Yeah, so organizations can file an extension, but didn't for-profit businesses get an extension? What was their extension on their annual federal tax return?
Same thing. 7/15 is pretty much the due date for everyone right now.
Okay, good deal. So 7/15, a few months of
Yeah.
a short window.
It's a very short window. And then Illinois also extended, but it was not an automatic extension. It was something that you had to apply for. And that was also to 7/15.
Okay. We got a comment saying this was a very helpful program, so thank you. Yay.
Aww.
Any other questions? We'll hang around for a few minutes. If you have to bounce out, feel free to do so, or stick around if you want to hear any other questions from anyone. Thanks for typing them in if you have any questions. I want to thank you three for your expertise and your knowledge. I'm sure you'll probably get, you kindly included your contact information, so any of you can feel free to reach out to Dugan and Lopaka directly afterwards. They'd be happy to answer any questions you have. That's what they're here for, and they're experts with nonprofit organizations. Another positive comment, thank you, yes, very helpful, and thanks for your time. So we appreciate it, Jackie. Happy to do it.
Thank you.
We'll hang around for another minute or two for anyone who has questions. And again, if you have to go and drop off, feel free to do so. Ron, you want to share your contact info back in the second to last slide so that folks can see that? Great. Another positive comment from George. Thanks, George. He said, thanks very much. Very informative. Happy to do it. Okay, I think we're good. I'm going to go ahead and end the webinar. Hugh and Ron and Becky, if you have any questions for me, you can follow up with me later on email, but I'm going to go ahead and end things. I'm also going to go ahead and stop the recording now. So